Hey, what's up guys? Welcome back to the channel. Hope you guys doing well today. As you see from the title of the video, we're going to be talking about the risk that I took by investing into Nio. We're going to be going over how well the stock has performed for me since buying in, my thoughts on the company. I'll be discussing whether I'm going to keep holding on to the shares that I have, if I'm going to be buying more shares, if I'm going to sell all my shares, and what do I think is going to happen with the future of the company. So let's get into it. So here we are looking at the share price for Nio today. They're down a little over 6% today, about 29 cents. As you can see right now, the stock is only in the $4 range. When I first started buying Nio, it was on the IPO date, which was in September 2018. I started buying Nio in the $6 range. Now, yes, the share price is down $1.50 from where I bought in at, but we'll go over that later on in the video. What I want to go through now is just look at how the stock has performed over the last couple years. All right, so this stock has had the highest of highs at $13.80 and the lowest of lows was at $1.19. And that's a big difference from where the stock was at its all-time highs and where the stock was at for its all-time lows. And as of right now, the stock is at $4.50. So as you can see, based off of these highs and lows from this history here, you can see how volatile this company has been, how volatile the stock has been. And that's the reason why this company is such a big risk for anyone who wants to buy into the company. Back in 2018, when they first IPO, there was a lot of big head news that came out. This was supposed to be the Tesla of China, the Tesla killer. Those headlines generated a lot of news. Everybody was talking about this company. And at that point, I was still a newer investor. I had under a year experience as far as investing at that point. So I bought into the hype. And I know I talk about that in my other videos, that you don't want to buy into the hype. You don't want to hop on the hype train because you can get hurt. And clearly there was people who had this stock at $13.80 and the stock dropped all the way down to $1.19. So imagine how those people were feeling who was buying in the $10 range, $11 range, $12 range, and so on, that dropped all the way down to $1.19. That's crazy. Like those people really got hurt because they hopped on the hype train. Now, me personally, I will go over and tell you exactly what happened with me, and whether if I made money, whether if I lost money, and what's going on with my current position and what my cost basis is now. But what I do want to show you is the performance of the stock over the last 3 months, because Nio has made some big moves over the last couple months. And if you would have bought in a few months ago, you could have made potentially a lot of money because of the volatility that this stock has. So here we go, looking at Nio. And like I said, over the last 3 months, Nio has went up 200%. In a 3-month period, this company went up 200%. You could have made a lot of money off of this company. Now, obviously, you never want to count on short-term fluctuations, but if you were one of the people who bought this stock 3 months ago and you gained 200%, you are you're extremely happy with the performance of the stock and how the stock is doing. In my personal opinion, I do not believe that this type of growth as far as the share price can be sustained over long term. They have a lot to prove. They're a very small company. They're doing a fraction of car sales that Tesla's doing as far as electric cars inside China. They're doing a fraction of the business that Tesla's doing. They got a long way to go. They also have a lot of debt and they don't have a lot of cash. They're struggling right now. If you look at their balance sheet, they're struggling to stay afloat. Like, they're trying to get money from other investors and from banks and the government to try to keep their business alive. Right now, they're in a situation where I believe that it's either going to be boom or bust. And I know a lot of investors who own Nio is hoping that there's going to be a boom. So with this valuation that they have, it's a high valuation relative to the amount of business that they're doing, but it's a low valuation compared to other car companies. So if they can get their valuation up to a $40 billion valuation or a $50 billion valuation, you're talking about 10x in the share price that where it's at now. I do believe that they're 10, 15 years away from that if they can survive the hard times and actually make it through this. So we'll just have to see how things go in the future. But congratulations to anybody who bought the stock 3 months ago, being up almost 200%. Like, that is just amazing. Congratulations to you. You made the right move. Now, I don't want to shy away from the fact that the 1 year mark, they are down almost 30%. So if you would have bought the stock a year ago, you'll be down 30% today. This is a volatile company. Like I said, it's going to be boom or bust. So we'll just have to sit back and see what happens in the future. They are producing electric vehicles. The number of sales that they have is growing quarter over quarter and year over year. but it's still such a small volume, and they're not generating enough revenue compared to the amount of debt and everything that they have out right now. So we'll just have to sit back and watch. All right, so here's a screenshot of one of my accounts here, and as you can see, I'm holding about 300 shares of Nio. And the average price that I paid for these is $6, which means I bought $1,800 worth of Nio when I purchased these shares. And as you can see, we're down about 25.5% for Nio, which is giving me a market value of these shares at $13.44 because the average price right now is about $4.50. Now I know what you're thinking.
Yeah. Oh my gosh, you're losing a whole bunch of money. You're down a lot of money.
But that's not the case, because I actually made some moves. I bought in a couple times, and I actually sold some stock before, which I'm going to put a screenshot of. I sold some of my shares, which actually gave me my initial investment back. So currently what you see on the screen here, these 300 shares are free shares, because I bought enough and I sold enough to get my initial investment back, because I knew how risky of an investment that this was. I think the first time I did that, I ended up with like 100 and something, like 105 free shares, because I got my initial investment back and I just kept the rest of them. Then the following month in October, the same thing happened once again. I found another buying opportunity and I was able to pick up another couple hundred shares, and then it took off again 2 days later, and I was able to sell off again enough to keep some shares to the side because I got my initial investment back. So here it is, I'm left with 300 shares for free because I already got my initial investment back. Now, like I said, this was early in my investing days, but I had a feeling that this stock was gonna be really, really risky. For some reason, I just had a feeling it was gonna be risky, and I am so happy that I was able to buy it, sell off enough, keep the extra shares, buy it again, sell off enough, keep the extra shares. And now here I am with 300 free shares that I could just sit on and hold. And whether if it's a boom and they go way up, or if it's a bust and they go bankrupt, I already got my money back. The only thing that I may have wasted was a little bit of time, going and buying the shares and then selling the shares at the right time, but it's boom or bust. I've been sitting on these shares since the IPO date in 2018. I'm not planning on buying any more shares. There's no need, there's no reason for me to buy any more shares. I got 300 shares, and like I said, they're totally free at this point. I'm still debating whether if I want to sell off these shares, because I do think I have better investments to put my money into. But by me holding on to these shares, it is giving me an opportunity to keep track of what's going on with the business, because once again, this is still a learning opportunity. And who knows, this company could just go on another tear again and might double or triple again in price. And here it is, I'm sitting on 300 of these free shares, and I can make another couple $1,000s just by holding on to these. Now, when I got my initial investment back, I actually took that money and reinvested it into other companies that I felt like were great American companies that I knew was gonna make me money. And so far that has worked out well for me, because that money has actually grown even more. For those of you who bought in 3 months ago and now your investment is 200% higher than what you bought in at, my personal recommendation, I'm not a financial advisor, but I would recommend you taking some profits, or limiting your risk, trying to at least get your money back that you initially put in, and keep the rest. That way you can just sit back, and if it continues goes up, congratulations. If it goes down, it doesn't matter to you, because you're not going to lose anything, because you already got your money back. And like I said in other videos, when you ride the hype train, you can get hurt. That's why it's really, really important for you to do your research, or get lucky like me. I'm not gonna lie, I got completely lucky with this. I didn't know that it was gonna shoot up like this right away. When I first bought into it, I was looking at this on a long-term play. Like, I know electrification of vehicles is happening, and there's gonna be a lot more companies coming out with electrified vehicles. I was right on that aspect as far as electrification is gonna be the future, and I still see it being the future. But I am so happy I limited my risk, because I bought into this company based off the hype. And I'm happy I didn't buy too high, because I could have got hurt. I could have lost a lot of money. Now, you're not gonna always get opportunities like this where you can buy and your money just double or triple fast, and then you can get your money back. But when you do get that opportunity, limit and lower your risk by trying to at least get your initial investment back. That way, there's no risk to you. You can choose to hold on to the rest of them for the rest of your life. You can sell them, do whatever. If they go boom, then you're good. If they go bankrupt, it don't matter. So if you're gonna take anything away from this video, take that away. And don't buy into the hype unless you know for sure that you've done the research prior to being hyped up, and you know for sure that you're picking a great investment. That's all I got for this video. Thank you guys for checking out another one of my videos. Make sure you hit that like button and subscribe. That way you can be notified when I post future videos. I got a lot more videos coming soon, so stay tuned. Thank you.